They are one of the only carriers that allow you to have in-home care. So they will actually double the income. If you can't do 2 out of the 6 daily living activities, they will actually double it, which is awesome. Hey, welcome to the Guaranteed Retirement Guys show. So my name is John Stevenson, and I wanted to talk to you about one of my clients that I've been working with. And this couple, they actually were looking for income, not only for retirement, but they were also looking for income for long-term care. You see, they had parents who were going through this or who had gone through this, and they wanted to make sure that they were set up for themselves. And if you've ever looked in long-term care costs, that can be really, really pricey. Anyway, so what we were able to do is we were able to get them over $300,000 in guaranteed income every single year for their retirement, which is pretty awesome. Over the course of just looking at the different carriers, and there are a lot of different carriers, but we were looking for something that would give them also a potential doubler if they needed long-term care. So if they needed long-term care, it would actually double from $300,000 to $600,000. And we did this all with about $2 million. Not bad. So if you think about it, if you take it over, let's say 20 years, and let's say you don't need long-term care, they're still going to take out $300,000 plus every single year. Even for 20 years, we're talking $6 million in income from $2 million. That's pretty good. Now, what if they need long-term care? Well, a lot of these annuities, typically with the long-term care benefit, is a lot of times what happens is if you cannot do 2 out of the 6 daily living activities, the insurance company will actually double. Not all of them will double it. Some of them will kind of give you just a step up of what you're already getting. But the one we were looking at, it was actually with Midland National. And I like Midland National because they are one of the only carriers that allow you to have in-home care. If you can't do 2 out of the 6 daily living activities, they will actually double it, which is awesome when you're thinking about like maximizing the care, the coverage, and the income from your money. Midland National is one of my favorite companies I like to work with as far as that's concerned. Now, the income is not as high as maybe we could get from like F&G right now, or maybe Athene, or even American Equity. But when you're looking for long-term care, especially if you're looking for a company that is not going to limit you to a nursing home or some type of confined care. So think about this. Let's say you take out $300,000 a year. Out of that 20 years, there's 5 years where you need long-term care. So now they're doubling it. So instead of $300,000, you're getting $600,000. And so what they do is they will pay that out until they liquidate the account balance. So let's say it takes 5 years to liquidate the account balance. Well, you do the math. 5 times 6, we're talking $3 million over just 5 years. So instead of getting $25,000 every single month, they're getting $50,000 a month when they need it the most. And if they take that over 5 years, well, that's another $1.5 million in income in addition to the $6 million that they're taking if they take it over 20 years. So think about that when you're looking at putting money into an annuity. What does matter is if you're thinking about, hey, I want some long-term care. I'm okay having a little bit less income, but in return, they might give you an index with better growth. And when you have better growth, it means the money is in there a lot longer. When the money's in there a lot longer, it means that the likelihood of you actually using that long-term care is much, much higher than if you were to work with another company that was cutting your index growth in half. You see, when you choose a fixed index annuity, they're all tied to indexes, right? And so when you put the money in, if it's $1 million and you put the money in, let's say American Equity, they'll give you a ton of income and they're phenomenal to work with as far as that's concerned. But the problem is if you have an index that's only paying you half, right? Because right now I'm looking at one of their indexes where it only pays you about 45% of what the index does. So 45% participation rate, which is not great if you want that account balance to last. So if you're getting 10% growth one year, they're only going to give you 4.5%. It's going to be hard to keep that account value up there where it needs to be, so that if you do need long-term care later on, that there is some type of account balance to draw from. Anyways, I just want to share that with you because I think about what they're going to put away into these two annuities. It's going to be $1 million each. So we're talking $2 million. We already know from $2 million over a 20-year period, they will get $6 million in income. Okay, if they take that out for 20 years, that's what they're going to get. The nice thing is if they need long-term care, they have the potential of taking out another 1.5 million. So really, they're turning 2 million into at least 6 million, maybe 7.5 million. That's why you use annuities. Okay, they're not putting all their money into it, and they got their money in other investments, which is great. So you know, if the investments make a lot more money, they're able to capture that growth. But you know, if those investments go down, then at least their income is not hurt because they have these annuities that are providing that peace of mind. The guaranteed income, you know, $25,000 a month guaranteed, and then of course doubled if they need it for long-term care. How's that for peace of mind? Anyways, I was just thinking about that today, and I want to share it with you. And if you want to chat more, if there's some issues in your life that you're thinking about, as far as maybe you don't have enough income, if you want some more certainty in your life, okay, you want some guarantees as part of your portfolio, not just risk, not just market, not just, whatever you have your money in, whether it be real estate, business, dividend. I mean, there's so many different things you put your money in, which there's nothing wrong with that. But if you want a more balanced portfolio, then we should talk. Okay. So there is a link below this video. If you want to book a call with me, go ahead, go to that link, and it's about 30 minutes. And we'll just get to know each other. I'll ask you a few questions and see exactly what you're looking for. And I'll show you everything, okay? I believe in full transparency. When you're looking for annuities, you're looking for income, you're looking for growth, you want the most benefits possible, you have to be shown everything, okay? You've worked your entire life for this money. You have to make sure that you are getting the most for that money, okay? So that's what I do. If that's something you want to chat more about, book a call, and I look forward to chatting with you then. So again, thanks for watching the video, and we'll see you next time.
Hey, thanks for watching. If you've learned anything in this video, please go to the comments section below, share with me your thoughts, and share it with the community. We look forward to chatting with you through that.